Welcome back, everyone. Michael here with Offshore Citizen. Today, we're going to discuss the best place for Americans to form offshore companies. So stick around. I'm going to give you the in-depth examination of all the options and where you should go if you're an American. Before we get started, though, if you have not already, please smash the subscribe button. It's really helpful for us if you can, subscribe and follow along. Check out our other videos. Click the notification bell. If you like this video, please click the like button. It's very helpful. If you don't like it, please let me know in the comments. If you'd like to see other content, please let me know in the comments. And if you'd like help with international asset protection, offshore tax planning, so how to reduce your tax as low as legally possible, how to set up offshore companies or help offshore, setting up offshore companies, offshore bank accounts, etc. Or if you'd like help with residencies, citizenships abroad, or any of these other international topics, please reach out to me. You can book a call, clarity.fm/Michael Rosmer. Happy to help you. And let's get started. Okay. I just finished doing a very in-depth analysis for some clients. It was a really complex case, and we went through all kinds of stuff for it. It was an American company. And as a result, I figured I would take a little bit of time and figure out here, or explain to you guys, some of the relevance to where, as an American, check my thing is working properly, hopefully I didn't lose that, where as an American you should form a company. And this is influenced primarily, I would say, by the Controlled Foreign Companies rules, in particular the introduction in the end of 2017 in the Tax Cuts and Jobs Act on something called the GILTI tax. Okay, GILTI tax is a horrible thing. Very difficult to get around. And so, you don't want it. Now, your perfect scenario, by the way, is if you have foreign partners and those foreign partners can own at least 50% of the company, then you can end up in a situation where you're not a controlled foreign company. Then you have to deal with something called the passive foreign investment company rules, which are also very complicated. But anyway, that's one thing that you can deal with, and you can reach out to me if you have any questions about that. But otherwise, you have this GILTI tax thing to deal with. Now, what does GILTI tax boil down to? In most cases, it means you're going to get taxed 10.5% abroad, even if you didn't make the money abroad, like if you didn't make the money in the US, and even if you haven't repatriated that money, you have to basically take your share of the income and associate it and basically pay taxes on it in the US, okay? In complement for that, the thing that's good about it is under certain circumstances, you can bring that money back into the US tax-free, essentially reducing your corporate tax rate from 21% or higher if you have state income tax down to 10.5%, which is pretty cool. How does that work? How that works is you have to have a US C Corp. Okay, the C Corp owns the foreign company. When the foreign company, it will pay the GILTI tax, then it repatriates it, and there's IRC 245A, I believe it is. It goes through the terms under which you can repatriate this tax-free, which is fantastic. And then, you've got this lower tax rate. So that's kind of like, in many respects, the best case scenario for Americans today. There are some other nuances, like, maybe you can take advantage of the foreign earned income exclusion. Maybe you can take care of, something else, but that's really helpful. Now, let's go through what the best options are for you. So in theory, as an American, the best option is simply to move to Puerto Rico. Okay, if you're willing to move to Puerto Rico is the tax paradise, bar none, for an American. You qualify for Act 60. It's excellent, great. You can get down to around 4% corporate tax, potentially 0% tax on dividend and capital gain, et cetera, income. There's some complications there, but there's lots of nuances to this, but potentially that's really, really good for you. So that's your best case scenario. If you're not willing to move to Puerto Rico, which a lot of people are not willing to, right? Then the question becomes, is it possible for you to use some other structure? And there's going to be two scenarios here. The one is, hey, you're willing to move abroad, right? If you're willing to move abroad, then there's some benefits that you can derive there, but you're still taxed on your worldwide income based on your citizenship. So that's, you're somewhat limited. On the flip side, maybe you're willing to stay in, or you're wanting to stay in the US, and can you still benefit from this? The answer is, yeah, you can, if you can have non-US source income, a foreign entity which is not conducting what they call US trade or business. Okay, if you have a company that is not conducting US trade or business, and basically what you would do if you, like a lot of times somebody would say, hey, listen, I have clearly some US trade or business, but then I have a bunch that's not, and you could separate this out between companies. This would be a very common thing, right? So if you have foreign contractors, if you have foreign customers, foreign suppliers, et cetera, there may be a way, and there's nuance as to whether you can do this because there's other rules around it. So if you have questions, again, reach out to us. But what would happen is you could have a US company. The US company could then own a foreign company. The foreign company could do all the non-US business, right? You could potentially pay as little as 0 tax there, okay? And then you would pay GILTI tax, unfortunately. It was a controlled foreign company. If it wasn't, and there's maybe some ways to get around it depending on your circumstances, but most of the time not, then you would bring it back at 10.5% tax. Not the worst thing in the world, right? Oh, and by the way, you could possibly get better write-offs abroad as well. So your real effective tax savings could be, somewhere between 50 and 70 or 80% probably, okay? So pretty cool. All right, so does that, let's say that you were gonna do that, where would be the best places for you to form a company? In most cases, we went through and we looked at all the different options to try and work around the rules, etc. Usually at this point in time, you would have to look at a few things. Ideally, you would want some place that has 0 tax or as close to 0 as possible. You would want some place where, if needed, you could substantiate the substance of the company, and you would want good banking, okay? This is not easy to get in a lot of the world today. So there are a few different ways that you could achieve that. One would be through some sort of a territorial system if you could avoid withholding taxes, etc. You could end up in a situation where maybe you have some sort of a remittance-based tax system that also could possibly work, right? But generally speaking, I think at this stage, one of the easiest places to go is UAE, okay? So it's not for everybody. We have to consider other factors like, how do you need to charge your clients? If you need to have payment processing, well then, maybe you want to be in Cyprus, right? Hong Kong is okay, but it's really hard to do banking. So it depends on, who is it that your customers are, what the nature of your business is. If we can get you banking there, that's a pretty good option in a lot of cases. And then we sometimes like Labuan as well. Obviously, there's going to be some cases where you're like, hey, I have an office in Germany, and so you're kind of stuck in Germany. That's a really bad situation for you. You kind of want to avoid that. And the reason is, if you're in that situation where you have to deal with Germany, it's not going to necessarily get rid of your GILTI tax. Now it might, okay? So there is one little caveat here. So there is something called the high tax exemption, okay? If you have the high tax exception, then if you paid over 18.9%, it's 90% of the current US federal tax rate, then you can avoid the GILTI tax and only pay that, right? Now, this is not a great situation because you're still above the 10.5% that we're trying to get you to, right? But theoretically, that would be an option. So anyway, every situation is case by case. I'm giving you kind of like a general idea, framework of places to look. So places that I would be looking would be UAE, Cyprus, Hong Kong, maybe Labuan, maybe a territorial tax place. Those would be the places that I'd be looking to start off with if I could. And then everything and above that is going to be like really specific case by case. So anyway, I hope that helps. If you would like some assistance, please reach out to me. Happy to help you. You can book a call, clarity.fm/Michael Rosmer. There's a link below, or you can check out our websites, offshorecitizen.net, offshorecapitalist.com. And please click the subscribe button, click the notification bell, check out our other videos. I got like a ton of videos out here. I'm trying to put out lots of content for you. If you like this video, share it. If you have questions, put them in the comments. Love to hear from you. I'm going to see you guys on the next video.